Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. Late last year, a few bullish patterns started to emerge and eventually led to a move up towards the combined resistance in mid-April this year of the 2012 high at 241.05 and the November 2011 high at 243.40. The market then headed all the way back down to the combination of the declining neckline of the April to May 2022 reverse head and shoulders pattern, currently 196.30, plus the 50% Fibonacci line of the big old 2011-2019 move at 198.30, and most importantly, the very slowly rising medium moving average, currently 206.35, where prices stabilized during the middle of May and turned back upwards. 11 weeks ago, I had a look at the longer term charts here, and this is what I saw, and I quote, the key move there was over the 50% Fibonacci line of the 2011-2019 move at 198.30. This has seemingly validated the action since September 2022 to date as a possible double bottom, Adam and Eve type. Thus, potential targets for such a pattern topside would be a primary target X1 in the 235 area, for secondary harder to reach target X2 up in the 251.60 area. These are early days, but that is what it is looking like right now. Well, prices reached the primary target X1 in the 235 area, exceeded them even. However, target X2 up in the 251.60 area has not been reached and for now has been retired. This all leads us to where we are now, and I have a conundrum. You see, to me, the action since the start of the year until mid-May looked like an inverted diving board pattern, with the flat run in, the shoot up and drop, followed by the climb out, but inverted. This is very close to the edge of pattern recognition. If you want to know what going over the edge into madness looks like, just Google vomiting camel pattern and see what I mean, and you'll see what I mean. Ultimately, this leaves me with just a V-top pattern, which I have long felt was only half the story. Anyway, the V-top stroke inverted diving board pattern is over, and prices created over early May a small double bottom pattern. The ambition of this pattern was quite limited, only up as far as the 216 area, which we achieved 6 weeks ago. 4 weeks ago, I was prompted to draw a bullish Andrews pitchfork for the action since mid-March to early May, which I have since finessed into a shallower bullish shift pitchfork that you can see highlighted in dark blue on my daily chart. From this pattern, you can see how the middle time, currently at 236.25, working initially with the congestions at 220.90, 224.40 to 226.45, 229.15 to 230.10, and ultimately the 2012 high at 241.05 managed to erode the price rises enough to stop them rising and caused a dip enough that 4 weeks ago we tested the very recent 50% Fibonacci line at 218.65, and even the green highlighted rising short medium moving average, currently 219.80. However, from there, prices have moved back up, which questioned the validity of a possible double top for the April to date action. This question had enough weight on my mind that last week I drew an April to date downtrend, currently at 235.65, highlighted in pink on my daily chart. That, to my mind, has elements of making the whole April to date action into a possible very large sideways triangle, currently 206.95 to 235.65. Last week's weekly key reversal up should have challenged this pattern, but instead we already had an immediate move lower this week, down to test the rising green highlighted short medium moving average. Hence, by just today's action so far, it seems the sideways triangle has gained greater validity. London coffee. 16 weeks ago, prices shot up through the late January to early March bear channel line, prompted by the rising green highlighted short medium moving average, currently at 39.39. The market took its own sweet time, but it did in the end exploit the upside. I said 14 weeks ago, and I quote, "It nevertheless still lays out all sorts of possibilities topside." Thus, if we look at the bear channel as a bullish halfway hesitation, then we need to look at 2 points from there to measure where to start measuring from. Thus, for the first pattern, we would have a potential target X in the 3480 area, whilst the second origin you could see up as far as a potential target X1 in the 3700 area, well up and off my daily chart. So that was back then. End of quote. A few days after my commentary, target X at 3480 was reached, and soon after, the harder to reach target X1 in the 3700, well, that was also achieved. Prices then made a peak 10 weeks ago and turned lower once again, this time with greater force, adding a changeover gap in early May that has since been filled and dropping down as far as the combined January high at 32.62 and the slowly rising medium moving average currently at 36.59, where once again the market stabilized. Towards the end of May, prices started rising again with a breakout over the green short medium moving average that had corralled the upside in early to mid-May. It was enough of a breakout higher that prices 4 weeks ago made a new all-time high at 43.94. We have since come off a little, even making an outside weak pattern 2 weeks ago, and failing to challenge that all-time high. All this action allowed me 2 weeks ago to draw a bullish Andrews pitchfork for the late February to early May action, highlighted in dark blue in my daily chart. I suggest this bullish Andrews pitchfork is key to this market, especially the lower time, currently at 39.75. With the nearby green short medium moving average currently at 39.39 and possibly the 50% Fibonacci line of the April to May move at 38.28. You see, if we connect the recent highs, we have a bright red trend line currently 44.23, and together this trend line and the lower bullish Andrews pitchfork may make one of possibly two patterns: an April to date possible cup with handle pattern, or the one I currently favor, an April to date possible ascending triangle pattern. We are right now testing the lower time, and should we have a confirmed break lower, then for the ascending triangle we'd have a primary move of about $755 below the confirmed break, and a secondary, much harder to reach move of $1,075 below the confirmed break. This move hasn't started as yet, but I thought it prudent to let you know just in case it happens before my next commentary. Now, I should point out that prices could still turn back up and carry on within the triangle, but I'll keep a close eye on prices in case they continue lower. The only other pattern potentially visible right now is a possible double top Adam and Eve type, though this is far less developed and may not come about. However, should it come about, its downside potential is far greater than either an ascending triangle or a cup with handle pattern.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.